It's time for another edition of Are You Down with LPT? And today we are down with Matt Nolan, our favorite in-house banker, and we're talking about, there's been some headlines of late.
There's been a few things out there, I think.
Or they're disappearing, like
Yes.
your 401k and things like that. But it's been a crazy couple of weeks, probably a couple of months. Aside from any politics there's some real action going on in the financial world. And Matt, as realtors, we would like to understand, how does that impact our mortgage rates?
You know, I'd love to break it down for you and tell you exactly what's going on with it, but I'm going to tell you it's kind of an unusual market right now, and I think we're just holding on for the ride. Just as soon as I think I've got it all under control, I get thrown another curveball. For example, this morning we actually got some news from the wholesale pricing index that actually came out that should be favorable. It actually came in lower than what was expected. But now I looked at the bond market before I came in here, and the bond market has gone through the roof.
And that's something that you've talked about. We've talked about in the office here during our meetings that for the last few weeks, the things that in the past have caused an action in a positive or negative way have been almost the opposite. Am I understanding that correctly?
Yeah, I mean, I think a lot of people equate the federal fund rate, when they talk about raising the federal fund rate or lowering it, mortgage rates aren't necessarily based off of that. I look at the 10-year T, and the market looks at the 10-year T. That's what the mortgage rates are based off of. And there was a time last week, the 10-year T was about 3.9, or somewhere right around 3.9. And I just looked before we came in here, and it was 4.5. So we've had a pretty big swing in a week, and it's kind of where I'd say uncharted territory. I think the unemployment number came in positive, and then the wholesale price index came in positive.
Positive as well, yeah.
As far as if you're looking at it from the lens of the rate segment. But the market's acting exactly opposite of these positive news, and obviously the elephant in the room is the tariff talk.
Yeah, the Chinese dropped 124% on top of
what's
us.
124% among friends?
Yeah, exactly. But here's the bottom line, and you and I are both old enough to have gone through multiple kind of shaky times, 2001, 2007 through 10. Of course, COVID. The fundamentals of life and how you live life don't necessarily change. You need a house, you need a place to live, and over time, Matt, am I wrong? Buying a house in any market, especially in Des Moines, you're going to be building on that equity. You're going to be able to, it may not be the most prime time to buy a house right now if you're hitting 7%, but you can always refinance. And the fact of the matter is you're living your life in that home, and I'm building on that equity. Yeah,
Jim, I mean, 100% right. Bottom line, it comes down to you can run scared of everything, but you have to live your life the way you want to. And yes, we've got some fluctuations in rates right now. I guess the piece of advice I would probably throw out there, even though we do have these wild swings in rates, a lot of people I'm advising right now, I don't have a crystal ball to it, but when the market kind of reacts opposite to general consensus, if I was buying a house right now, I would still go forward with the house, but I probably wouldn't lock in the rate. I would kind of wait to see what happens. Now, to be fully transparent, you could get stung with that. But the bottom line to it is that you had mentioned earlier, the refinance is one of those things where it's not a lifetime commitment because it's a 30-year mortgage. The bank is guaranteeing that rate is going to be good for 30 years as long as it was a 30-year fixed rate you're getting into. But it doesn't mean you have to agree to that for that 30-year period of time. Let's say at 6 months from now or a year from now, or rates get better, just refinance it. It's not going to cost you that much for a refinance, and if it gets you the house you're looking for, I'd recommend going for it.
And it's always at points like this in the conversation when I like to show off my age. And in 1995, 8 3/4, and I was real happy about that because it had just dropped from 9.
Yeah.
So, and then the older folks in here talk about 17, 18% on mortgages.
There a lot of older people are talking about breaking into the single digits versus the double digits. That was a big monumentous occasions there. So, I think it's all relative in timing too. But I think we've kind of got this the mortgage thing got dialed in. So marry the house, date the rate is the phrase a lot of people use, and I'd say it's a great segment right now in today's day and age.
Well, and you mentioned relatives. I mean, you could have more move in with you and help pay for the house.
Yeah,
too.
sure.
Okay. Maybe not. Let's talk a little bit about some of the programs that are out there for those first-time homebuyers. There's still money, grants, different avenues for those first-time homebuyers to jump into that first house right now.
Yeah, I will tell you right now, the seems like the biggest segment of the population that are buying houses right now is first-time homebuyers.
I agree.
Because rents, obviously everyone knows that rents are going up, and the first time home buyers are out there thinking, why am I paying somebody else's mortgage basically for them? So the first time home buyer is definitely a huge segment of the population. We partner with Iowa Finance Authority, and I am one of the premier lenders for Iowa Finance Authority. Love their programs. They've got some down payment assistance. And there's a lot of people out there that can afford a monthly payment and have no problem making the monthly payment. It's coming up with that $10,000-$15,000 for the down payment that they struggle with.
Yep.
So where Iowa Finance Authority has come into play is they'll offer a 5%, they call it DPA or down payment assistance. It does go on the property as a second mortgage, but there's no interest, there's no payments, there's no nothing on that second mortgage or that DPA until you go to sell or refinance that property. I'm using that program quite a bit right now, and it just really helps younger people, even if they have the $10,000, $15,000 saved up. When you want to move, you want maybe some new furniture, maybe you need a lawnmower, snowblower, that kind of thing. So we're definitely taking advantage of that down payment assistance to get somebody in the house, and then maybe they've got a little cushion so they're not draining their savings to get in the house. So
yeah, and there are those little accessory expenses that go with buying a house, like you mentioned,
and the unforeseen thing that's happened when the furnace goes out or the AC goes out.
Well, that's why you put a warranty on that, Matt. That's what you got to do.
That's
right
a valid
there.
point.
What about as you look into your crystal ball and well, let's talk a little bit about activity in that, and I'm just going to use the 400 and above. Not quite as active as say under that.
Yeah, I mean, like what I'm experiencing right now, I think the higher the price point, the lower the activity. Right now, I'm seeing a lot of activity in the probably the sub 400, more like in the 300 and below range, because that is a lot of your first time home buyers. I do know that there are houses that are being sold in the $500,000-$600,000 range, and I would consider that the step up buyer. And I think as kind of rates kind of settle out a little bit, I think we're going to see that activity definitely pick up. And so I think if you're maybe a value shopper, right now might be a good time to pick up a house in the $500,000-$600,000 range, if that's something you were looking at.
Yeah.
Because I do think that as the market heats up a little bit, which I still believe it will happen, you're probably the value may not be as great as it is right now in the future.
And I think you're right. There absolutely is a bit of a slowdown in those higher price points. But at the same time, I just went through a deal in Waterbury last weekend, multiple offer situation on a house that was very expensive. So it's still out there. The buyers are still out there. There's still activity. I saw a headline where people have more cash on hand now and equity in the homes that they're sitting in than they ever have before, and that's a positive.
Yeah, I mean, and I'm trying to remember the exact stat that I had. The number of people that have paid in free mortgages is growing and is growing every day. Yeah. I remember back in 2020 and 21 when I was doing a lot of refinances. Most of the people I refinanced at that point in time, we went to a 15-year mortgage. They're 5 years into that mortgage. So even though they're sitting at a 2% rate or a 3% rate or 4% rate, whatever the case may be, every month they make a payment, their equity in that property grows and their payment or the balance shrinks. So if you think about it, that 2% rate or that 3% rate every month has got less influence on their buying decision, because your balance goes down and the benefit of the lower rate is diminished a little bit.
All right. Well, we'll end with this. So interest rates hovering closer to that 7, maybe for the folks with that have the established credit, but still better rates for first-time buyers.
Yeah, so the IFA programs, they are some subsidized rates out there. So yeah, you can get the subsidized rates more in like the mid 6s. But the repeat buyers, you're probably looking closer to 7. And I do hope that things will calm down. So we'll see what happens in the next couple of weeks.
The other thing too is don't forget, Matt, when you've got that listing and maybe it's not moving as quickly, think about that buy down.
Yeah, buy down is a great little tool, but we can get into that next segment, or if you'd like me to go and do it now.
Go ahead.
Well, the buy the buy down, the one that seems like the most popular is a 2-1 buy down. So let's kind of just take a scenario. Let's say you've got a house that is sitting for a little bit, and you want to entice some of the buyers that you think maybe are sitting on the sideline because of interest rates. Let's just say the going rate today is at 7%. You as a seller could incentivize a buyer by offering a 2-1 buy down. You would buy the interest rate down 2% for the first year and 1% for the second year. For example, let's just use some ballpark numbers. On a $300,000 house, it might cost you $6,000 to offer a 2-1 buy down. But it could be a huge benefit to the buyer if they're kind of struggling whether they want to get to that next price point. They might have a much more aggressive payment for the next year, and then a little bit more aggressive payment for the second year. And then hopefully they can refinance it in that amount of time and get in the house that they're dreaming about.
But they're going to be, no matter what, even if they don't refinance, they're going to be at the interest rate today. So if interest rates
go up,
you're still protected there. So
100%.
A great option for trying to help market that house. Well, Matt, we appreciate you as always. The community's choice for the best mortgage person in the whole wide world. That guy. Love you, Matt. Appreciate you being here. And I got to turn on the music now. All right. Are you down with that, Matt?
I'm down with that.
All right. Are you down with LPT? We have the mortgage version today. Thanks for joining us and have a great rest of your day.